You're listening to Carrie Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm Carrie Lutz. Well, we just made it through Black Friday, but Black Friday is not what Black Friday used to be. We did have good sales numbers. However, perhaps the retail sector has finally caught on and they're spreading out the Black Friday promotions. Maybe the consumers have caught on and see that all that glitters is not sales on Black Friday. Let's talk with our good friend, Eddy Gifford, tactivefinancial.com. It's great to have you back, Eddy.
Great to be here, Carrie. Thank you for having me.
Hey, so what's your take on Black Friday? And let's not forget inflation, which in itself will drive up sales numbers, even if incremental volume isn't going up.
Exactly. And that's the thing that I think that's going on is, you see the headlines and they try to make us believe that, oh my goodness, like everything is good because online sales top $9 billion and it's up 2.3% year over year. And it's like, when you think about that, you're like, wait a minute, I thought that inflation was 7.7% and according to the last consumer price index print. So if online sales are up 2.3% year over year, well, we're not actually up on an inflation adjusted number, right? And the other thing is that that's pretty much the only way people are shopping now. Like, I don't know if you went to any stores this weekend, but the few stores that I did go into, I was concerned that it was going to be packed because it was Black Friday, and it was quite the opposite. So I think to your point, we might be in a situation where the consumer is starting to be a little bit more tactful, a little bit more careful. Maybe they're not spending as much, but the big issue that I'm seeing as I was diving into the numbers is the fact that most of these purchases, even if they were getting deals, they're being purchased via credit card, or the big one is the buy now, pay later. And so that's the thing that really has kind of been making me uncomfortable is every time I log into something, whether it's my own or see anything online, there's always this option, hey, buy it now and pay no interest for 4 months. And it's on everything now.
Yeah. Well, so real sales, the thing that matters, really isn't going up here. It looks like it's probably going down a bit.
Yeah, I would say it's going down. We didn't see near the foot traffic. The only thing that was really reported this weekend was the online sales for the most part. So it's, of course, the spin is, but mobile commerce has gone up so much. But, you don't have the foot traffic. You don't have the real numbers, right? If we were to say real numbers, we could say that it's gone down by 5% year over year when you adjust for inflation, which is a pretty big deal. And then when you couple that with the fact that inflation, although it may have peaked, we don't know for sure if it's peaked, but although it may have peaked, it's not like it's dropping off a cliff. We're definitely not getting to that 2% factor anytime soon. It's going to take time. That's going to continue to stretch the consumer's pocketbook. And when interest comes due on all these purchases in 4 months, it could be this tidal wave that we're definitely concerned about heading into next year.
All right. So tidal wave, and the fact is we're not being told the whole story. What's your opinion? What do you think the story really is or really should be?
Well, I think that right now everything has been so Fed focused from the standpoint that the market's been really trying to push and price in a pivot. And really, it's not a pivot if what happens, if they say what happens. So from the standpoint that the Fed has already said, we're going to reduce the increases. The Fed has already said that we're going to kind of slow them down and then halt heading into next year. But the thing that people don't realize is that although that may be short-term bullish from the standpoint that we're like, yay, like interest rates aren't going up anymore, all that means is that they're seeing the destruction of demand that they're trying to accomplish. That means that employment is going to start going up. We're already seeing the long-term treasuries, whether it's the 10 or the 20, start to retreat, which is basically telling us like, hey, warning sign, things are going to get bad. And so, if I had to guess, I would say that first or second quarter next year is probably going to be ugly. We're going to go back down, at least test the new lows, if not hit new lows, before the Fed actually jumps in and starts easing. When the Fed starts easing, that's when it's like, this just got real. And that's when we see the market really, really pull back. And that's when you see a bottom occur. So I don't think that we've seen a bottom occur yet. Of course, I could be wrong, but everything is pointing toward worst before better. And that's just, looking at things from a big picture macro view.
Yeah, well, so what impact do you think the economy had on the election, if any?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I don't know if the economy had so much of an impact. I think it did from the standpoint that, the Republicans took over the House. I think that the thing that the Democrats were smart about was attacking Roe v. Wade, getting closer and closer and closer to the election. So from a tactical standpoint, I think that they were smart there. I think that it creates an issue from the standpoint that we're really not going to get anything done for the next 2 years because we're going to have, polarizing views, which we've already had. But now we actually have control on opposite ends of the spectrum. And so all that means to us is that we're going to continue this slow grind down for the most part, most likely. And, we'll get these little pops like we've had recently where everyone feels happy for a minute and it just kind of sucks us in and we say, oh yeah, let's invest. And then the market, the big picture kind of gets back at us. So I think that it made a difference, but I don't think it made as big of a difference as we thought it would, honestly.
Right. All right. Well, hey, everything's all messed up. What do you think are 3 things the government could do if they wanted to really help get us out of this economic doldrums, this mess here, Eddie?
3 things. Geez, I don't know if they can do one thing. I think
and walk at the same time, maybe.
Well, it's one of those things where we're in a situation where they keep bending and bending and bending and bending and hoping that it doesn't break. And the thought of like this soft landing scenario where they are actually able to ease at the perfect time and bring us back into, a perfect transition into the new bull market of the future. I think that we're being way too hopeful there. I think that we already started too late, which caused us to have to over tighten, in my opinion. That's going to work its way into the economy next year. Couple that with the fact that housing is going to have a very, very bad year because of the interest rates remaining elevated. And so I think that, the only thing that we can do to fix this thing is to just completely start over, right? But we're not in that situation now. So you would hope that you would say, oh, well, they can just print more money. No, that's going to drive more inflation. Oh, well, they should tighten more. Well, that's really going to hurt a lot of consumers because things are going to go down. And so Powell's made it clear that he would rather have a recession than inflation. And so I think that, they're going to continue to quash inflation. And unfortunately, that means that the recession is coming. And I don't think it's going to be as pretty as a lot of people are making it out to be.
Wow. All right. Well, you're just full of a bundle of season's joy here, Eddie.
Of course, it's the holidays.
So it sounds like we're going to have a very bleak rest of the year, probably 1 or 2 quarters coming. And then at some point, the Fed will pivot, and they're kind of trying to pretend that they're not while they're doing it now.
Right.
When's the pivot come, and when are happy days here again?
Well, I think that, we're going to have the illusion of happy days through the holidays, because that's just kind of the way that it works. I think that it'll be interesting to see what happens this week when Powell speaks. If we have another Jackson Hole moment where he just says, "Hey guys, I told you, now I'm going to tell you again," and then the market either like falls into free fall, or he kind of props it up for a little bit longer so we can have a good holiday season. Of course, everything that's happening with cryptocurrency and the unrest in China going on right now, like that's not helping the market situation either. But if we were to say, okay, well, what's going to happen? We would guess that they actually go to 50 basis points this month and on December 15th. Then they go to 25 basis points at the next meeting, and then they kind of like level off over that to see like what happens. But I think that, like I said previously, all that does is just say that, hey, this stuff is working, and that's going to be coupled with the continued reduction in earning estimates. And so happy days, I would say end of second quarter, maybe beginning of third quarter next year. I wouldn't call them happy days, but I'd call them the opportunistic days where we'd be potentially near bottom and really time to deploy some capital.
All right. Well, I guess we will leave it at that. Eddy, if people want to find out more about you, connect with you on the web, how do you do that?
Yeah, easiest way, tactivewealth.com/Eddy Gifford. There's a contact me button on that page. You can always Google Eddy Gifford just to kind of see a little bit more about me. I always encourage that. Always do your research before considering hiring an advisor. But at tactivewealth.com/Eddy Gifford, and I look forward to speaking with you.
All right. Excellent. Hey, if you've got a question for Eddy or myself, shoot us an email, kl@kerrylutz.com. Don't forget, sign up for your free newsletter at financialsurvivalnetwork.com. Eddy, we'll talk to you again. Thanks so much for stopping by.
All right. I appreciate it, Kerry. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.